Yes, we believe that in fact, obviously, inflation is very high, and as shown by the numbers. But we think that we should be near a peak, even if the war in Ukraine should perhaps make this peak later in the year. But we think that around June, September, depending obviously of the war, we should be at the peak for several reasons. First of all, there is a base effect because there was a lot of fiscal and monetary policy put last year that affected the demand. There is some bottleneck issues that are starting to be less urgent. And therefore, I think, and even the Fed, although they've put inflation as their first target, see the end of the year inflation around 4.5, while today it's around 7.5. So we think that the market has reacted already to that. And we use internally what we call macro basket, where we construct baskets of financial instruments which are supposed to perform well in certain kind of macro environment. And the inflation basket, for example, has performed 17% year to date. And if you compare it, for example, with the recession basket, it has performed 0%. So what we're saying is that the inflation risk is already priced in the market. And the risk which is not priced is a recession risk following this commodity crisis.
Fascinating. So the recession will come because economic growth stalls, or will there be other reasons for risk assets to sell off?
So we see the recession risk as a risk and not as a base case scenario. But what we are saying is that historically, commodity price hike of this magnitude has led to recessions. Because in fact, consumers and companies have no time to react, and consumers feel it already in their power of buying things, and like quite basic things, and companies therefore also feel it at their through the input of things they need to buy to produce. So there will be a demand shock, which could be followed by companies reducing on investment and business sentiment being negative, which can spiral into a recession.
Just one more on this, Fiona. Good morning to you. Are central banks, and in your notes you say fighting inflation has become their top priority. Do you really mean that? When I look at the central bank in your home country there as well, the SMB, and then I look at what the Riksbank has been saying over in Stockholm, and then I look at really what the ECB is doing, I think they're talking about fighting inflation, but are they really doing anything that's actually going to fight inflation?
I think the narrative of the central banks at least is aligned, and we have to take into account the different narrative compared to last year, where inflation was seen as transitory, and now inflation has become the first force to fight. And this is even more interesting in the US, where the central bank mandate is dual between preserving growth and inflation, and now inflation has taken the top seat. So I think, yes, there is obviously the willingness to fight inflation, but everybody is aware that there's also a recession risk. So you have to find the right speed. And one of the biggest risks we see here is a central bank policy mistake, because if they go too fast, then there is a risk. And if they go too slowly, then there's another risk.